Welcome to Fintech Brews and News, brought to you by Central Payments and Falls Fintech. I'm Nikkee Rhody.
And I'm Trent Sorby.
Founders, co-founders, payments professionals, and, well, just people who love brews. This is a place to get a behind-the-scenes look at unique partnerships and ways to bridge the financial gap between banking, startups, and the entire fintech industry. Whether it's a beer or coffee or something else, there's certain to be a brew in every episode. After all, how do we function in this space without it? Each episode, you're sure to take away some good stuff going on in the financial technology space. So without further ado, let's grab a brew. Well, hey, everybody. Welcome back to another episode of Fintech Brews and News. I'm Nikkee Rhody, here with a very special guest, Elizabeth McCluskey. She is taking us through our continuation of the Women in Fintech series. And so, Elizabeth, thank you so much for hopping on.
Thank you. I'm excited to be here.
Yay. Well, we have interviewed a ton of remarkable women in fintech, and you're our first one in the venture capital space. So why don't you take us through a quick introduction of what you're up to, who you work for, and then we'll go from there.
That sounds good. And hopefully I won't be the last female venture capitalist, but I'm honored to be the first that's on the podcast. So I've been in financial services for my whole career. I started in investment banking and then wealth management, and I've been in venture capital for about the last 7 years. And I'm currently the head of the Discovery Fund, which is part of CMFG Ventures, which is the corporate venture capital arm of a company called CUNA Mutual Group. So that's a lot of layers, but just to break it down, CUNA Mutual Group is an insurance and financial services provider that's been around for about 90 years. It's based in Madison, Wisconsin, and primarily serves the credit union ecosystem, which, if your listeners are not familiar, has been around for a long time and is an integral part of the financial services landscape in the U.S. There's about 5,000 credit unions in the U.S. who serve almost 130 million Americans. So the overall mission of our ventures arm is to invest in fintechs who can support credit unions in their efforts to better serve members with affordable and accessible financial services and products.
That's amazing and touches a lot of consumers. And something that's interesting to me, I'm glad you called out the credit union bit, because there's always this conversation about how banks can, quote, play with fintech, or how banks become more fintech minded and friendly. But there's a ton of traction in the credit union space. Would you agree with that?
Yes. And I think credit unions, historically, they were brick and mortar institutions who were very much embedded in the communities that they served. But particularly with COVID and everything needing to happen remotely and digitally, credit unions have kind of quickly realized and adapted to the reality that they need to integrate technology into their offerings, whether that's kind of consumer interfaces, end-to-end digital experiences. And so they have embraced a lot of the companies that we've invested in and tried to kind of form partnerships with as parts of their strategy moving forward.
You bet. Talk a little bit about the background of the Discovery Fund and maybe your thesis.
Yeah, so like I said, Ventures has been around for about 7 years, which focuses on Series A and later stage companies, kind of broadly in this fintech credit union ecosystem intersection. The Discovery Fund sort of narrows that thesis a bit more. We focus primarily on pre-seed and seed stage fintech companies, and we are looking at underrepresented founders. So we're investing in companies who have a woman, BIPOC, or LGBTQ CEO at the helm. And that's part of our effort to try to reduce the inequity in the venture capital funding ecosystem, where I'm sure, everybody has heard these statistics bandied about, but unfortunately they haven't gotten any better. So I think we have to keep repeating them just to keep people aware that the reality is less than 3% of venture capital funding goes to Black and Latino entrepreneurs, as well as women entrepreneurs. And I think the statistics are even more difficult to track down for LGBTQ entrepreneurs, but it's typically thought to be less than 1%. So those numbers are nowhere near the proportion of demographic representation they have in the US. And so we're trying to do our part to close that gap. The other part of our thesis is that we're investing in solutions for financial inclusion. So we're looking for companies that are promoting affordability and accessibility of financial services, particularly to underserved communities. And so we think there's a really nice synergy between the entrepreneurs we're talking about and the solutions we're looking for, because we believe entrepreneurs who have experienced the problems they're trying to solve are those who are best positioned to actually build those solutions, be committed to those companies. And so we think, entrepreneurs who come from underserved communities are often the ones best placed to build those solutions.
Yeah, that's really powerful. And you hit on so many good statistics that is really remarkable. How did you land on narrowing in on that? Was it what did you drive that as a woman yourself, or how did you get to a point where you decided this fund has to be dedicated to that demographic?
I think a lot of the work was done prior to my joining. So I joined specifically to lead this strategy, but it was already kind of the infrastructure was in place prior to my joining. But I think it was part of really a company-wide kind of effort and discussion to have our values reflected throughout the company. So we've been pretty active in diversity, equity, and inclusion efforts in terms of our employee um, initiatives. And then we've also actually done a lot of work with the credit unions we serve to help them think about DEI when it comes to their employees and serving their members. And so the natural kind of extension of that was, how can we focus our investment strategy to incorporate those values as well?
You said you were kind of doing your part. I'm wondering, as you invest more time and energy into paying attention to the statistics on, the BIPOC, the LGBTQ women, what do you think the future looks like? Are we seeing trends in the right direction for more inclusion and diversity?
I think there's been some really promising headlines around new funds being established that are either led by underrepresented venture capitalists or that are focusing on underrepresented founders. But I think when you look at the industry wide numbers, the statistics haven't moved meaningfully in the past couple of years. I think part of that can be explained by, if you kind of make the analogy to sales cycles, and especially with enterprise deals, sales cycles can be up to a couple of years long. And I think in venture capital, our kind of sales cycle is very long. So, it can take 5 to 7 years, if not longer, for those earliest stage companies to actually become successful and potentially achieve exit. So I think we have a lot of really great kind of seeds that are being planted over the past couple of years with some of these new funds and strategies focused on underrepresented founders. But I think it's probably going to take another couple of years to start to see some of those really big successful exit stories. And I think once we start to get that flywheel effect of those success stories, there's going to continue to be more money moving into underrepresented founders. But I think it's been slower than I would have hoped to see those numbers move meaningfully.
Yeah, I would agree. And we have a mutual partner. Fritch actually came out of Falls Fintech, and that's an investment that you guys recently made. Would you talk a little bit about that?
Yeah, so this is a great company. Again, I think speaks to the power of relationship building in this space. We have a relationship with your accelerator, as we do with many other early stage fintech programs who are kind of working with those earliest stage companies. They are a social finance platform targeted at Gen Z. So Gen Z, is really coming into a tough market and kind of a tough era. They're saddled with a ton of student debt. They don't have a lot of financial literacy. They're afraid of using credit, so they're heavily kind of relying on debit cards. And they just, they need some support, but they have grown up in an era of social media and a lot of things being sort of more public or community oriented than perhaps previous generations were comfortable with. And so Fritch is taking that idea of kind of leveraging the power of your community and your peers to help you become more confident and educated about your finances. So they have features around, like budget challenges you can do with your friends and community benchmarking, where you can compare yourself to peers at other universities or other people who are in your geographical area to see, how am I doing relative to other 21-year-olds when it comes to spending on Ubers or bars and restaurants? And how can I think about directing some of my savings goals towards longer term events, like, putting down a security deposit on my first apartment or saving for a vacation. So that company is led by two really fantastic female founders who themselves are part of Gen Z. So again, I think speaking to my previous comment that we want to see entrepreneurs who are embracing solutions that would actually apply to them. They've just been fantastic with kind of taking their idea and running with it, leveraging some of the introductions and connections we've made on their behalf. So we're very excited to see how that one turns out. But they've really grown a tremendous amount in the short time we've been connected with them in terms of getting a ton of users from college campuses across the country.
They've done just such a fantastic job. I think on their college campuses, all the ambassadors that they use, and even playing in the merch space and really seeming to grab onto everything it takes to attract customers.
Well, yeah. And I think, bad habits are easily formed and hard to break. And so I think the younger we can engage with people as they're kind of entering their own financial maturity and their financial journeys, kind of the better we can set these populations up for success for the entirety of their lifetime. And, understanding the power of things like compound interest, which can work to your benefit if you're saving, and obviously can work against you if you have credit card debt or things like that. So I think kind of engaging with Gen Z where they are, like meeting them on college campuses, tying it into this kind of fun brand is a great way to make people feel like it's something that their friends are doing. It's not something that's boring and that they have to study in a textbook. So it gets them engaged, but really has a powerful kind of underlying education component.
So Elizabeth, you have talked a lot about the different activities that you all are doing and how the trends are moving not as quickly as we would like to. Do you have any other thoughts for anybody who's listening on what else can we as an industry do to make access to funds easier for these underrepresented founders?
Yeah, I think the answer, or at least my version of the answer, lies with VCs themselves. I think we still have a very undiverse profession. And so venture capitalists who are already in kind of positions of decision-making authority need to make a concerted effort to recruit, to hire, and to promote more women, more people of color, more LGBTQ individuals, people who don't come from, Ivy League backgrounds or, are named John and went to Stanford. I think there's been statistics about like there's more men named John in venture capital than there are, people of color. So I think recruiting people with diverse backgrounds into check writing roles at venture capital firms is going to go a long way towards diversifying the perspectives of those decision makers and of those conversations around who should get funding, and even just sourcing those deals and kind of improving the outlook of who's in the pipeline in terms of diverse founders. So I think that would be my big call to action for any investors who are listening today.
How many companies so far has Discovery Fund invested in? And then on the heels of that, what does the future look like for this fund, or what stage is it at?
We have been very busy. We're definitely trying to, put our money where our mouth is. So we've invested in about 18 companies in a year and a half, which is on track with our target of investing in 10 to 12 companies per year. And of that portfolio, we have about 55% founders of color, 39% women founders, and 6% LGBTQ founders. So now that we're a year and a half in, we have this great portfolio. We're actually looking forward to publishing our first impact report at the end of this year to highlight some of the positive outcomes that our companies are achieving for the consumers they serve. In terms of the future, we're hopeful that a number of our companies will graduate to our ventures portfolio over time. And the goal is that through our Discovery Fund investments, we can really get to know these founders and support their growth and scale to the point that they're ready for bigger checks from our other strategy, as well as other later stage fintech investors. And in the near term, I think 2023 is going to see a lot of bridge rounds, kind of probably in venture capital at large, definitely in the fintech space, as companies and investors are still dealing with turbulence in the capital markets. And so I think, again, part of our thesis and part of our role is that participating in these bridge rounds is going to be really essential to support those early stage companies as they kind of continue to not quite be ready for that later stage capital, but we really want to do everything we can to support them and ensure they survive some challenging markets long enough to be successful.
Yeah, on that, what do you think is your prediction of 2023 beyond just the bridge round needs? What else is going to happen in the fintech industry, do you suppose?
I mean, I think unfortunately a number of companies are going to go out of business. I think a lot of valuation expectations are going to get reset. I think there has been, 2021 was an incredible year for entrepreneurs generally in terms of, getting some really strong pricing on deals. And so I think some of that's going to correct. We've definitely seen that happen in the public markets. It takes a while. It's kind of a stage by stage process to trickle through into the private markets. But I think there's also been a lot written about how really incredible companies are forged in very challenging economic times. And so I think those who are efficient with their capital and haven't overhired or can kind of correct their headcount appropriately, and just sort of like focus on getting new customers, improving margins, will come out very strong companies at the end of this.
Perfect. And for those that do graduate out of the Discovery Fund and move on to your later stage fund, does that have the same kind of aim as far as credit union intersection too?
Yes. Yeah, I would say that becomes even more relevant as companies get into the later stages because we're writing larger checks. So, more of our balance sheet capital is going into these companies. So we want to make sure there's just strategic tie-in. We also have a fintech solutions team at CUNA Mutual that actually works with a number of our portfolio companies and helps distribute some of their products. So as those companies get into that later stage where they're really kind of ready to scale selling to credit unions, we have internal resources that can support them in that.
You guys really seem to have a strong strategy that's well-rounded. I appreciate all the different kind of touch points and how to think through that cadence of where people would fit.
We're working on it, so thank you.
Yeah.
It's been an evolution, and I think there's more to come. And I am really excited about, because I think we're unique as a corporate VC. We're not just representing one customer; we're representing this ecosystem of 5,000 credit unions. So I think there's a lot of ways we think we can add value to the companies we work with.
One next thought is just in respect to the stage of the Discovery Fund. So you've got 18 companies you've invested in so far. Do you have room for more? Or are you pretty well maxed out at this point? Have you dispersed the whole fund?
No. So we have an annual allocation from CUNA Mutual Group. So we're going to continue to deploy capital into new companies. We will see what our kind of human capital limit is. I mean, I think at some point we will need to hire more people to help support all of these companies, but we're continuing to actively look for new opportunities and see a lot of great companies in the pipeline right now.
That's amazing. So anybody who's listening, if they feel like they met the kind of guidelines or whatnot for this fund, how would they get a hold of you? What's the best way to do that?
I try to be as available as possible. So, I mean, you can contact me on LinkedIn. You can email me. My email is my name, elizabeth.mccluskey@cunamutual.com. We also have a contact us form on our website, which is cmfgventures.com. And I am generally kind of the first line of response when it comes to Discovery Fund companies. So I am very busy, but I do really make my best efforts to respond to people within a couple of days of them reaching out.
Absolutely. And of course, people can always reach out to us and we can make the connection as well. So Elizabeth, this has been fantastic, wonderful conversation. Is there anything else that you'd like to share? Anything that you think is important for people to know and understand?
I think we've covered all the bases, but I would just say, even if you are not a company that thinks you're a fit, if you have friends or family or colleagues who are working on something, like send them my way. If there's other accelerators or investors you think might be aligned with our thesis, like I am in the job of kind of relationship and network building. So I'm always happy to take conversations with people.
Well, thank you so much. This was really beneficial and a fruitful conversation for talking specifically about women in fintech and, of course, the diversity that you guys are driving towards. So thank you so much and appreciate your time.
Thank you. It's my pleasure.
There you have it. We hope you enjoyed this episode of FinTech Brews and News. Keep up with all the content and cool stuff happening at Falls Fintech and Central Payments by checking out our website, our YouTube channel, LinkedIn, and Twitter. Subscribe to this podcast so you don't miss out on our next episode.
I'm Nikkee Rhody.
And I'm Trent Sorby. See you next time.
Cheers.